So we have to do all the due diligence, like the last minute parts of the due diligence process. What we like to look at is location, the builder, so both those things check off. We're now just in the, actually my partner Simeon is on a call right now negotiating the last part of the due diligence, which is the incentives that's going to be offered to investors. So a couple of things that you always want to look at as an investor and make sure that these incentives are in place. One, that you have the ability to rent it out during occupancy, because there's two stages to a pre-construction condo closing. There's occupancy and registration, and in between that time, if you're not able to rent it out as an investor, you're going to be out of pocket. So we need to make sure that incentives in place. The second incentive is to make sure that all development charges are capped, because you don't want any surprises at closing. And so by putting it into the agreement ahead of time and making sure that the lawyers dot the I's and cross the T's in the 10-day due diligence period that you get, which is essentially called a 10-day cooling period in the province of Ontario, you know that there won't be any surprises at closing. Another incentive that just actually came to my head right now is making sure that you have the ability to assign the unit, because life happens, right? So you're purchasing something today. We're sitting in 2019. The building's going to be built in 2022, 2023, so 3-4 years from now. A lot of stuff can happen, and so you want to make sure that you have that security blanket of assigning. So you're going to be flipping the paper before the building even gets built. What a lot of people are using that for in our city now is the fact that there's been so much profit made in that time period of 3 to 4 years that they're actually flipping the paper for profit. I myself, my partner, my team, what we really try to drum into investors' heads is the buy and hold strategy, because the longer you keep your real estate, the more money you make. It's just a fact, right? In Greater Toronto Area, for the last, every 10 years, you'll notice that prices double. We've actually seen prices double in the last 5 years. But being ultra conservative, if you just look at the last 10 years, every single decade, prices have doubled. So how do you create real wealth in real estate? It's by buying and holding. Now, there's some opportunities that come up from time to time where you can, flip this, flip that, and see some profit. But unless you're actually doing the work yourself, I probably wouldn't recommend it, because that in itself is a business on its own. You need to get the right general contractors. You got all the service providers that are involved. You got to make sure that the market can bear a flip. And what I mean by that is that if you're buying too high, you might not be able to sell it for a profit. And so if you can just have the patience and do a buy and hold, refinance every 4 to 5 years, you can use that money tax-free to go to Vegas, or, I know I'm a little biased, I would buy more real estate with it, but at the end of the day, it almost works like an ATM, right? Because what you're able to do is refinance it every 4 to 5 years, pull out the money, do what you want with it, tax-free, because you're not selling anything. There's no tax implications to it. So if you can continue and have that long-term mindset when it comes to real estate, buying and holding, in my opinion, it is by far the best strategy when investing into real estate.